Welcome to Java. Thank you kindly for joining me. It is November 13th, 2024. It is also Wednesday, which is CPI day. We're expecting some reports prior to market open on the core inflation. Before I get into some of what's driving this and what we can expect, I would like to send out a thank you for all of you that showed for the uh, homesteading discussion that we had last evening. I think it was a wonderful discussion. There were quite a few things that were covered with that. We will also have a discussion this evening after the markets close at our regular time. Tonight, I'm going to be covering a bit more about what I'm not going to cover. This morning, I'll skim over it, but we've got major currency trades and currency wars going on. And to dive a little bit more into this inflation, how it's going to affect us moving forward in our daily lives, whether you're a trader or not. So, with this, let's get started. Favored risk indicator is rising significantly at the 290 mark. Now, we've got the fear greed meter dropping slightly, still strongly in the greed territory. Now, yesterday I was asked how these two work together and what the difference is. Now, the MMRI is based on the 10-year yield and the relative strength of the dollar. 10-year yield indicator of the debt market, which is much, much larger than the stock market. Now, the fair greed meter is based off indicators in the stock market, kind of giving more of a window into the retailer. Now, if you are a day trader, probably more interested in the fear greed meter because this is based on junk bond indicators, uh, options, calls and puts, the ratios, stock prices, and also a couple of other factors that affect the stock market directly. This one, 10-year yield, relative strength of the dollar, much larger. And you want to watch this one for the pre-indicators because this will show prior to this one. These are the ones that follow into the market. So with this, we've got cryptocurrencies have pulled back a bit, 87,913, but it has to set a floor, had to let out a slight bit of the deflation. I'm still long-term bullish on this. Think it's going to set a level and we'll see where it goes from here. But probabilities are favoring more of strength after this. So with these and the dynamic going on with the dollar strength increasing significantly, 10-year yield also rising now, we've got pressure in the stocks. Strong dollar drops prices. So stock market going down, but we've got the fear index or the VIX increasing along with the price of gold. We've got oil coming up also, but urging oil caution on trades. This is a lot of Middle East issues going on here. So oil very heavily manipulated right now and very volatile. Gold is resuming its pace up. So if you made or took advantage of purchasing that dip, I had quite a few people telling me they're having a hard time holding on to these. These are not good day trades. These are for the long term, for the long-term wealth factor. Okay, now they're not get rich quick. These are uh, holding your value. So the sentiment right now with this major currency war we've got going on, they are also using trade as a weapon. These rate cuts that they're talking about, they're expecting one more from the Fed in December, probably quarter point. Now, what do I mean by this? That they're using these rates. Think of it as if you were purchasing anything with a loan rate. So let's just say, for instance, a house. The mortgage rate that you get affects your payment and how much that overall cost is. So if you're purchasing a house and the rate goes up, then the price must come down and that suppresses it. So as we hike rates or have a stronger dollar, it suppresses the price of import goods and puts pressure on other countries. So we're watching them in a decline because of this current uh, environment that we've got right now. So we've got weak markets, but don't worry because we've got lots of Fed presidents coming out to speak and they can save it with their language, and if that fails, they've got the plunge protection team. So right now, gold, silver, and oil are recovering quite nicely. They are commodities that was an opportunity to buy the dip. So we are getting CPI inflation, and they're saying basically if there's another bad report, inflation looks bad, they may have to uh, affect their decision on the rate cuts, and that this is the reason the stocks are lower. And that's not quite true, really. It's the dollar in 10-year. So calendar this morning, we're getting that core CPI inflation numbers, and then, as I said, a slew of Fed presidents coming out to speak so they can manipulate however they need. Tomorrow morning, prior to the market open, getting initial jobless claims, which also affects the decision, and PPI. So producer price inflation basically can have an effect as well. That comes first, and then eventually you see those price increases in your goods. So these are earnings that we're looking forward to today prior to market open, after market close, and then Thursday prior to market open. If you're trading any of these, you might want to take a look at the charts, and then also the IV if you're doing options. We've got Fed's Waller saying the Supreme Court of the United States ruling should delay their interchange rule. Now, what is this going on in the background? What you're looking at is very bold-faced, the banksters attempting to control the judicial system. So they're not the Federal Reserve Board, is nothing to do with the government. This is simply a coalition of the top banks, and they know that they are strong enough basically that they can make these bold statements and attempt to bully, if you will, the judicial system now. So what do you think about the Fed? Here's my opinion right here. We've got also Bank of America's Moynihan praising the incoming team, and they should give you a little bit of pause, saying they should hit the ground running. What he means by this is that they are pro deregulation for the banks, lower regulation, which in general, less government regulation is a good thing. However, this is also what allowed them to run wild 2008 and cause all of the chaos that ended up in the Great Recession. So with this, I'd like to bring up this some major investment fund advisor, Paulos Kleinman, saying to open your eyes because inflation is not tamed. And we know this, and inflation will continue. As they escalate these currency wars, the currencies are in a race to the bottom, meaning they are devaluing as quickly as they can with each other, and they are just, it's government theft the way that they can do this. So as they inflate, that is value that comes out of that money supply and trickles straight up to those in charge, and namely the government first. So with this, we've got Fed's Kashkari saying only inflation could derail their December cut. And so their whole push really is to go into inflationary mode. However, they want to do it in a method that seems as if they've got your best interest at heart. So jumping across the pond, because this is a global issue now, we're looking at Germany, new finance chief ruling out federal funding freeze. What does this mean? Funding freeze basically is opening up so they can now print as they will, so more inflation. I spoke about this yesterday, the euro parity with the dollar. Now, they're saying this is a big trade by currency analysts. As I was saying before, it's starting to get attention because the volume of this is hitting spectacular levels. And this currency war, as I'm saying, can hit all currencies globally. Now, the United States dollar is the reserve currency, so it's a little more resilient than the others. However, it will eventually take that hit as well. Now, there's many ways that they can inflate, that they cover it up so it looks much better to the people. Here's a prime example. Japan's stimulus package will include price relief steps. price relief steps, meaning that they're going to be looking out for their people, or so that's the package, if you will, to play on words, that they are selling so that they can inflate. Now, as I was saying earlier, the crypto market is saying in extreme greed, they may need to deleverage prior to hitting the $100,000 target. I think that's what they're doing now. They deleveraged a bit, the price dropped a bit, and they're setting a level. Now, as they build more buyers, sellers, and solidify the level that they're at, can stand as a platform to launch it higher. So, on totally different news globally, the other side, which does affect financially because it is the physical wars, Russia is slamming Boris Johnson. Boris Johnson came out saying that if the United States would not continue to send massive amounts of funding to Ukraine, that the UK would be sending troops. So, talking about sending blood, troops, people into this meat grinding war, if you will. It's just another way that they're trying to inflate, but they are willing to put people on the line. It's all about the money in the background, and people don't matter. So I just wanted to put this up to as an kind of an insight. United States suspending all flights to this Caribbean country as Haiti. So all flights suspended from this airport. And I just want to put a reminder, this is the same island, which on the opposite side is the Dominican Republic, which is very wealthy, actually, in comparison, and doing very well. So taking a look inside a little deeper into what is going on between these two is an interesting thing, to say the least. Perhaps we'll talk a bit about that tonight as well. So, before I leave you, I have a question. What do you think, cousin or mere coincidence? Just to brighten your day a bit before you go off onto your day, wish you all a wonderful day. And until I see you again, my friends, stay free.